Kitco News Outlook 2025 is brought to you by Matador. Matador Technologies is bringing gold and real-world assets to Bitcoin.
Welcome back to Kitco News and our coverage of Outlook 2025. I'm Jeremy Safran. Gold is poised for its best annual performance in nearly 2 decades, up more than 30% year to date. Now, the highlights from this year include gold hitting 40 different new record highs and a total gold demand surpassing $100 billion for the first time in the third quarter. Now, according to the World Gold Council's 2025 Outlook report, it was gold's role as a hedge against rising market volatility and geopolitical risks that explained its remarkable performance this year. But the question is, what comes next? I mean, could we see another historic year in 2025 with new records broken, or should investors get ready to put some downside pressure on gold? Here to break it all down is Juan Carlos Artigas. Juan Carlos is the global head of research at the World Gold Council. Great to see you, Juan. Great to see you as always. Welcome.
Good to see you too. Thank you so much for having me, Jeremy.
So we got lots to get into. I mean, this has been a fascinating report that the World Gold Council has put out here. You have a chart showing gold outperforming most major asset classes this year, including U.S. stocks, emerging market stocks, balanced portfolios, U.S. bonds, and of course others. I'm curious here, JC, what's your takeaway for 2024 and that price rally we saw?
Yeah, it's been a very interesting year for gold for sure. In December, actually, U.S. stocks have started to rally a bit more and now have outpaced gold, but gold still remains one of the best performing asset classes compared to major assets for sure. And behind this movement, it has been a combination of factors, including demand coming from central banks as well as investors. And as you alluded to before, I think that the fact that there has been overall market volatility and geopolitical risk fairly upfront and center for many investors this year, it has been cementing flows into gold across the world.
Yeah, I mean, what were the biggest themes from this year that pushed gold prices above that $2,700 an ounce mark? I mean, was it just people excited about hedging? Was it this volatility in the market you're talking about? Any specific themes there?
Well, I would say that gold is a very effective hedge, right? And it's very much used in periods where people are concerned. But the other important point to consider when investors think about gold is that gold has a dual nature. It's not only an investment asset, and as we just discussed, a very effective hedge, but also a consumer good. And these two things coexist and complement each other with respect to gold. The other aspect to remember is that gold is a global asset. So what I would say is that at the beginning, in the first part of the year, in particular, Asian investors were hedging what they saw in terms of risk, whether it was local markets or currencies or just geopolitical risk, and they were supporting part of that trend. In the second half of the year, and in particular in the third quarter, we also started to see Western investors come into the market, and that was partly driven by the Federal Reserve. Well, first the ECB, then the Federal Reserve, and other European central banks to start to cut interest rates. So as opportunity cost decreases, that also encourages investors to look at, for example, gold as part of their portfolio, in addition to the geopolitical and volatility conditions we mentioned. So that's on the investment side. And in addition to that, just to wrap up, also central banks that continue to be strong net buyers for gold overall for the past couple of years.
Yeah, no, it's been fascinating to watch, especially some of that data, which we'll get into for a moment. I mean, JC, you've been doing this for quite a while. When you're analyzing the gold market from this year, what surprised you the most? Was there anything unexpected?
Well, what I would say is, from our perspective, we always think about gold in a very comprehensive way. Many investors actually oftentimes get surprised when, if you only look at US interest rates or the dollar, you may see a disconnect between what those are doing and what gold is doing. So, for example, if interest rates increase or if the dollar strengthens, people often expect gold prices to come down or to be flat, right? And in previous years, and also to a degree in this year, oftentimes we got questions from investors as to whether that relationship was not being followed, it was breaking down. And the reality is that US interest rates and the dollar still remain important components and drivers for gold, but they are not the only ones. So we think about gold both in the context of investment as well as in the context of consumption to understand its behavior better. And I think that that has given us a very robust framework to think about the development of gold, not only perhaps this year, but what we expect for next year.
Yeah, you also do a great job outlining gold prices returns across different currencies. A quick look at your chart here, which we'll put up, shows that gold has had the best return year to date in Turkish lira, up 50.3% year to date, followed by the Canadian dollar and the Japanese yen, with gold up 35.1% in both Canadian dollars and in the Japanese yen. It's so interesting to look at how gold performed across different currencies because it raises the issues of inflation and currency debasement, among other things. Can you comment on why the return was the highest in Turkish lira, for instance? Explain this to our viewers.
Absolutely. Well, that is basically the connection between the Turkish lira and the dollar. So when we talk about gold returns, and we were discussing at the beginning that gold returns in US dollars have been close to 30% so far this year, once you measure those same returns in Turkish lira, you need to take into consideration how the Turkish lira has performed relative to the dollar. So you're translating dollar returns to Turkish lira returns, and in particular, the Turkish lira has depreciated. And as it has depreciated, that basically means that when you measure gold's performance in Turkish lira, it would be significantly higher. That's also one of the reasons why Turkey, for example, is an important gold market for gold, because Turkish investors and consumers see gold as a means to preserve wealth and a store of value over the long run. And this is, I think, very well expressed on how it has performed in Turkish lira this year.
Yeah, specifically, I know Turkey's been dealing with such high inflation. Talk to me a little bit about the Turkish demand on the gold front then this year. Has that increased?
From an investment perspective, we in particular saw, I think, very healthy demand in the first half of the year. You do also need to understand that from a consumer perspective, as prices of gold increase, that is going to have a dampening effect on consumer demand, right? Mm-hmm. But overall, as an investment and as a means of hedging risk, whether it is currency risk or inflation risk, I think that role is still very well cemented.
Yeah, as we look into next year, JC, there's so many unknowns. I kind of call it the in-between because we're doing the Outlook 2025. Of course, we have President-elect Donald Trump coming to power in January. Some might think that there's some black swan events coming. I mean, we can see some other issues in the economy. One of the big unknowns that you highlight in your 2025 Outlook is what Trump's second term may mean for the global economy. You state in your report, quote, thrill-seeking investors may benefit from an early wake of risk-on flows, but potential trade wars and inflationary forces may spill over into an unexpected subpar economic growth. Expand on this to our viewers, if you would, and what you're anticipating here.
Well, we have already seen a good degree of risk on investments since after the election or in the U.S. So, for example, U.S. stocks have started to rally, and there's support, I think, and hopefulness that many companies and U.S. companies will perform well, and therefore many investors are looking to take advantage of those trends, and that makes sense as well. But at the same time, there's a lot of uncertainty as to what policies will be implemented in terms of whether it is foreign trade or monetary policy or fiscal policy. And those have big question marks, right, in terms of their effect, both for local and for global investors. And this is where the volatility aspect in, maybe the later part of the year would start to put gold more in the forefront of investors' minds.
Yeah, I mean, you talk about those potential trade wars, inflationary forces, how it might spill over into an expected subpar economic growth, in your words. So at the end of the day, what will subpar growth mean for gold?
Well, there's two aspects to this. On the one hand, from a consumer perspective, if we go back to gold's dual nature, if you have subpar growth, that may have a dampening effect on consumer demand. Consumer demand in the form of jewelry or even to a degree technology, even though that has been additionally supported by the AI boom. But we can talk about that a little bit later. So from a consumer side, that's part of the effect. Now, on the other hand, if economic growth starts to become significantly weaker, or if there's more market event volatility, that could cause investors to flight to quality, to look for high quality liquid assets that can be used to hedge their portfolio. And this is where investment flows in particular may benefit or may start to see stronger support as conditions in the economy or financial markets deteriorate.
Yeah, for 2025, as we talk about the outlook, you project a positive, but much more modest growth for gold in 2025. It's not going to be me reporting on all-time highs 40 times throughout the year, maybe. But what is the base case here on gold prices? I mean, what's the outlook? What's your macro variables that's going to affect the prices here?
Absolutely. And the way that we approach this is by looking at what market consensus is expecting at present, right? So it's not necessarily us saying, well, the gold price is going to do this exactly. It's more to say, if you take at face value what market consensus, whether it is from economists or from bond markets and so on, are expecting for next year, what environment, what does that environment tell you about gold's performance? And this is where we say, based on current market expectations, you may see a slightly positive but not as strong performance next year. Now, in reality, the economy and global financial markets very seldomly perform exactly according to expectations, right? And there's always surprises that happen. There's a lot of events that are very difficult to predict. So from that perspective, gold can get further support from either interest rates coming down more than expected, or for volatility, market volatility, and to increase, and or financial conditions to deteriorate. So that can actually provide additional boost for gold. On the flip side, of course, if interest rates remain high or do not fall as much, or they even policymakers revert course and they start to increase, that could create headwinds for gold.
Yeah, let's jump into that a little bit, because in your report, you outlined three scenarios for gold. In one, gold is range bound with a slight upside. And in the second, there's a downside pressure on gold. And in the third, gold is significantly higher. So let's go over these three hypothetical scenarios and explain the main drivers of gold prices in each one. Let's start with the range bound scenario.
So the range-bound scenario is based just on current consensus expectations. So what the market is telling us right now of what they expect interest rates and inflation and growth to do. To a degree, that is also reflecting that gold is a fairly efficient market capturing the current available information. Now, in terms of areas for support for gold, they can come from a couple of places. Number one, interest rates falling significantly more than expected, or volatility / risk increasing more, whether it is market volatility or geopolitical risk. So in addition, if we were to see stronger than expected, for example, central bank demand, that could also bring additional support for the gold market. So that's on the more positive side. Now, areas that may bring challenges for gold is partly the opposite side, where interest rates may not fall as much, or they may potentially start to increase, therefore moving the opportunity cost of holding gold higher. Or, for example, if consumer demand affected by negative or by lackluster economic growth is more challenged next year than it was, for example, this year.
I see. That's interesting. Of course, we have this upcoming FOMC meeting where the market is 100% certain, according to the CME FedWatch tool, that they'll cut by another 25 basis points. But let's talk a little bit more about this potential notably higher scenario that you talk about. In your report, you do highlight some risks that could lead to people expanding their exposure to gold. You write, quote, in addition, concerns about European sovereign debt are once again mounting, not to mention continued geopolitical instability, particularly in light of the events in South Korea Korea and Syria in early December. JC, what are the top risks that you see and the Council sees going into 2025?
Look, what is very challenging, I think, for investors, especially in this environment, is that it's very difficult to predict exactly what will come next. Meaning, there are trends that are worrying, including the fact that overall levels of sovereign debt have been increasing, and the ability of many governments to keep up with this type of spending and how to get funding has become difficult, right? So, whether it is in Europe or even the US and other parts of the world, that is definitely a concern. And then there's the geopolitical risk aspect that we have seen pop up in different parts of the world. And that's a part that you do not necessarily know exactly what will come next. But what we know is that has been very consistent and potentially popping up in an area that we may not be monitoring at present, right? So the combination of, for example, sovereign debt issues that have been playing Western markets for quite some time are starting to become more apparent. And one of the things that we learned from the aftermath of the global financial crisis is that when these things unravel, they tend to be very fast. And therefore that can, suddenly something that is a concern become a very important concern, right? So, and that can happen fairly fast, even if the timing is difficult to gauge. And from a geopolitical perspective, that we are seeing different risks come to the forefront of the news cycle and to investors' minds, but other things that we may not be monitoring right now could continue to be now in the limelight.
Yeah, you talk about, the debasement trade of what many analysts are calling it here, learning that inflation is unsustainable at these prices. Do you think that, more people will be getting into gold this year? I mean, in terms of that notable higher price that we talked about, any idea of what that would be, considering what we've seen this year?
Well, I mean, again, the gold market has this dual nature that also keeps the market in balance and volatility overall fairly low, which is a very good part and an important characteristic that gold has in portfolios, right? So if we look specifically at the investment side, we have seen historically that when investors start to enter gold because they are concerned about the financial instability or the financial conditions or the overall risk in the market, they can come fairly fast and therefore provide a lot of support for gold. In fact, actually, one of the interesting developments in 2024 is that even though, as you mentioned at the beginning of the segment, we reached 40 new time highs so far this year, in previous occasions when the gold price has reached many multiple highs in a given period, it has been accompanied by very strong Western investment flows. And even though we have seen some of those to a degree this year, they have not been as widespread, meaning that the market, from our perspective, especially in the Western world, is not completely saturated. And therefore, that can provide quite a bit of support for gold.
Yeah, when we look at the central banks, JC, what would encourage, more buying next year, which are already at elevated levels?
Well, and that is, I think, part of the point. I think right now, central bank gold buying has been getting a lot of attention, partly because of its contributions to demand and performance. But the reality is that central banks have been buying gold for more than a decade now on a net basis. And in particular, the past couple of years have been very strong. So for central bank demand in 2025, it doesn't need to reach a new record level for that to provide support for the gold market. We expect that demand at or above the average level of 500 tons per year can still provide quite a bit of support for the gold market.
Yeah, let's discuss China and Russia's central banks and their focus on gold. For example, you reported that in November, we saw China's central bank resume its gold purchases, ending that 6-month pause after prices for the precious metals rose to a record. What message does this send to you? I mean, how significant is this going to be for gold demand going into next year?
Well, I think that the most important part here is to understand that central bank buying is very widespread. So it's not specific to a single central bank. It is happening in Asia, it is happening in Europe, it is happening, in other parts of the world as well. So what is this telling us? Again, generally speaking, that central banks find gold to play an important role as a diversifier, as a store of wealth. They like the way that it performs in periods of risk. Right. So in addition to the role that it plays historically in reserves, especially for European central banks, many emerging market central banks have been adding to gold in their foreign reserves for these purposes of diversification and hedging. And we believe that the rationale for that remains fairly well in place. And the fact that we continue to see many of these central banks report all of those purchases is confirmation of the work that we've done in terms of surveys and also the estimation of central bank demand for the past couple of years.
Yeah, let's switch over to consumer demand for gold. I mean, your report mentions that the East has been a pretty constant presence. I think it's been Western investors kind of sitting out this party. But for most of the third quarter, apparently Western investors flocked back to gold as central banks starting cutting interest rates. So how do you see that these trends will develop going into next year? Will the West keep catching up here?
And I think that, we continue to see, I think, a perspective here that Western investors are looking at gold as a very viable hedge. And we see in inflows, for example, in gold ETFs happening, especially in places like the US and Canada, and this has been happening for the past 6 months or so. In Europe, I think that conditions are a bit more challenging, partly because of, the level of inflation and the level of growth that they are seeing. But the fact that, for example, the ECB just cut interest rates yesterday is against reducing the opportunity cost of holding gold little by little, which should encourage a bit more participation. So we do believe that this environment of lower interest rates will be supportive of Western investment flows. In fact, actually, one of our analysis shows that in the first 6 months since the beginning of a Fed rate cut cycle, gold prices have increased on average about 6%.
Interesting. Okay. And how have the Western investors been coming back in? I mean, have they been buying gold coins at Costco? Are they buying ETFs? We're seeing the inflows there. What's the trend?
Well, in particular in the US, I think that bar and coin demand has still remained at a healthy level. It has not been perhaps as supported in Europe, but we can start to see changes here maybe as we go into the next year. We will be launching our gold demand trends report for the fourth quarter in late January. So I think that is going to be very interesting to see how Q4 in particular pan out. But what we can monitor more consistently and more regularly are, for example, physically backed gold ETFs, and there are more than 100 of those funds around the world. And we produce a monthly report that tracks that, as well as a weekly information on that part of the market. And from those, we can start to see, or we have seen, quite a bit of interest from a variety of investors.
Yeah, what about the public here? I mean, it seems like this year, throughout the year, we've noticed that, especially with this whole Bitcoin run, we've noticed that younger generations are starting to get more educated about dollar debasement and inflation, realizing they can't go to the store and purchase the same thing. How does the West react to this?
Well, and what is interesting here is that actually gold has been a store of wealth for millennia. Right. And it's a very well established, and its track record is very long. So the fact that gold can play such an important role in the monetary system, and it has been playing that role for many decades and centuries, is definitely noteworthy. So, well, it is also interesting to see some of the development in cryptocurrencies, and as price have increased in cryptocurrencies, obviously that becomes attractive for many investors. One of the things that our research very strongly suggests is, number one, that there are fundamental reasons why cryptocurrencies and gold are very different, just in terms of the nature of demand. We were talking about gold as a consumer good as well as an investment. So there's applications of technology, computers that require gold, jewelry, so on and so forth, and that really stands or makes gold stand apart. It also has lower volatility. So in fact, actually, gold can be quite useful to manage a portfolio risk across the board, regardless of what type of investments people add into their portfolios.
Yeah, talk to me a little bit, JC, before I let you go about currency debasement. I mean, it seems like the East has been well aware that currency doesn't really hold wealth, but the West, people seem to be just waking up. Is that what's happening here?
Well, what is interesting as well is that for quite some time, the dollar and euro have been currencies that have been quite stable, right? And that is probably the lens in that people are seeing, right? But the reality is that if you look over time, as you mentioned, it is very clear that all currencies, and especially when looked against gold, have been depreciating for the past 50 years, for the past 100 years. So, and that's a continuum, constant really in the monetary system. So I think that is interesting that people are paying attention to this. This is something that is happening partly because of the elevated inflation, but the reality again is that gold has been playing a role to mitigate some of the risk that naturally comes from from exposure to currency risk in a very stable and well-established manner.
Yeah, it's been wild. 2024, as I mentioned, those 40 record highs in gold, a pretty wild year. Hey, JC, I mean, doing this for quite a while, anything like pretty surprising year for gold.
Well, a strong one for sure. I mean, of course, there's been years in which gold has increased by even more than 30%. But the fact that it continues to happen in spite of, the level of interest rates that we've seen, or kind of like the pickup in the US dollar in the past couple of months, has been, I think, noteworthy.
Yeah, Juan Carlos Artigas, or JC as we are calling him, is the global head of research at the World Gold Council from New York, joining us today. Thanks for this, my friend. I appreciate it. Fascinating 2025 coming up. Lots to look out for.
Thank you so much for having me, Jeremy.
Thank you. We'd also like to thank our Outlook 2025 sponsor, Matador Technologies. They're bringing gold and real-world assets to Bitcoin. You can find out more by going to matador.network. I'm Jeremy Sappin. For all of us here at Kitco News, thank you for tuning in. We got some great content coming your way, so hit the subscribe button, and we'll see you next time.
Kitco News Outlook 2025 is brought to you by Matador. Matador Technologies is bringing gold and real-world assets to Bitcoin.